Hey, rich friends, it's your girl Cha Cha reporting live from the Money Mantra, and we're back with another Forex education video. The reason why I like to post is to help as many people as possible become independent and profitable traders. So if that's something that you're looking for, make sure that you do subscribe to the channel. If you get to the end of this video and you find that it's helpful, make sure you give me a thumbs up, leave me a comment to let me know what you learned. But more importantly, share this video with another trader. If the videos are just not helpful enough and you do need more assistance, you can follow me on TradingView or register for personal mentorship. And that information is down below in the description box. So in today's video, we are going to be taking it back to the basics a little bit and talking about what actually makes the market moves, what is really driving everything that we're actually looking for. And this is simply price action. Now, in a lot of my videos, I do focus on teaching my strategy, on what you guys may or may not be familiar with. So you're probably used to seeing my screen look something like this with our two EMAs, our momentum and our stochastic. But today we're actually going to be looking at the naked chart, as some people like to call it, where we're only focusing on what the candles are doing and what this is actually telling us about price. Now, no matter whether you are a beginner or you are a proficient trader, understanding price action and what to look for can really help you in the long run. I'm also going to be showing you guys one of my favorite tools that you can use to help yourself find entry points if that's something that you still struggle with, or if you still find yourself uncertain about getting in and out of trades. Now, this is really important to discuss because if you have too many indicators on your chart, you will get confused as to what the indicators are telling you, and you think that the indicators are telling you what to do when the indicators should only be confirming what it is that you already see. Now, shout out to Spicy, right, who has a tarot channel on YouTube. So if you guys are into tarot readers, you can make sure you check her out on YouTube. But it's very similar to the tarot because tarot readers are not psychics. All tarot readers are not psychics, right? However, whatever they're telling you in the cards, it is based on what is currently happening, but you can change the outcome of that, right? If you understand your own situation. So it's very similar to that. The indicators are not telling you what to do. They're just showing you what is already there. So that's what we're going to focus on today, looking at the naked scanner, no indicators, and figure out if we can still enter our trades successfully by understanding what is going on. So again, if you do have any indicators on your chart and you want to practice doing this, the first thing you'll have to do is to delete everything, right? And your chart should look something like this. Now, on this chart right now, we don't see anything but the candles, right? And candles are, I just like to call them price action snapshots, and they're literally telling us a couple of things. Now, I do have several other videos on candles. You can check out the Candlestick Trading Bible, or you can check out other videos on YouTube. But I am going to do a quick review about what the candles tell us, and then we're going to go into market structure. And again, you don't need any indicators to actually trade and to understand what is going on in the market, but it does help you confirm what you're seeing. It doesn't actually create the opportunities for you. So first and foremost, again, a candle is just a price action snapshot. Depending on which time frame you are looking at the market in, that's going to determine the frequency of which these candles are appearing on your chart. Now, in the back of my screen, you're going to see I have a watermark. So it tells me the currency pair that I'm looking at, and it also tells me the time frame that I'm on. So I'm looking at Euro GBP right now, and my time frame is 1 hour. This means that one of these candles is going to appear every hour, and that particular candle is telling me everything that happened within that hour. Now, if I were to change my chart to a 4 hour, each one of these candles is going to appear every 4 hours, and that particular candle is telling me everything that happened within that 4 hour time frame. Now, the time frame that you're looking at does matter, but we're not really going to make a big deal about that today. That's all comes down to personal preference and your trading style. Now, what you'll notice on most charts is you'll see two types of candles. you'll see a red candle or a series of red candles, which is going to indicate the sellers are in control, or a selling trend, a bearish trend, a downtrend. All of these things literally mean the same thing. Now, when it comes to red candles, right, or sell candles, they are going to tell you 4 things about the price. And let's look at this candle, for example. And I'm just going to go ahead and zoom into this. Oh, I can't go in any further. I'm just going to zoom into this particular candle. So with red candles, or all candles, right? But red candles, they're going to have a flat top somewhere. They're going to have a flat bottom somewhere. Some candles will have a wick, some won't. But for the purpose of this example, we're looking at a candle with a wick. It should have a top and a bottom wick. But these flat surfaces are also very important. So for sell candles, the flat top, and again, you guys should be taking notes if you aren't familiar with candles, or if you just need a reminder. The flat top of a red candle is the opening price, right? For this particular candle. So for this hour, right, this was Tuesday. If I hover over it, I can see at the bottom, this candle was Tuesday at 9 a.m. I can see that price open here, right, at 86994. The flat bottom of a red candle is going to be where price closed. The top of the wick, right, or this stick, just think about an actual candle. It has a body and it has a wick. The top of the wick is going to be the highest place that price went for that hour. And the bottom wick is going to be the lowest place that price went for that hour. So again, we have a flat top, we have a flat bottom, we have a high, and we have a low, right? And this is called the open, the close, the high, the low, right? The open, the close, the high, the low, right? So that's for a sell candle. Now, the only other type of candle that you will find on your chart is a green candle, right? A buying candle, a bullish candle, uptrend. These literally all mean the same thing. Uptrend, bullish, right? Because bulls are associated with buyers in the market. It could be green, depending if you customize your chart. It can be blue. So yeah, these candles, the opening price is at the bottom, right? So it'll have a flat bottom. It'll also have a flat top. It'll have a higher high, and it'll have it'll have the highest place, and it'll have the lowest place that it was for this hour. So this is all the price action that happened within this hour. Now, just to give you guys an example, just about the different time frames, we're not going to focus on this too much, but I'm just going to highlight this candle. Hope I'm not back too far. I'm just going to highlight this candle, right? And that is 1 hour. But if I break this down to 15 minutes, within that 1 hour, I should see 4 different candles, right? I should see, well, my chart disappeared, but I should see 4 different candles within that hour. Well, simply because 4, oh, there we go. 4 15-minute candles is going to equal 1 hour, right? So that is where the time frames came in. And if I go back to an hour, it's just going to tell me, right? But we can literally see that within that hour, price started here and price went up to here. And if we break it down to a smaller time frame, all we're seeing is the, all right, I'm breaking up. Let me know when I'm clear. If I'm clear, drop some 8s in the chat. If I'm still breaking up, drop some 4s in the chat. If I'm breaking up, drop a 4 in the chat. If I'm clear, drop an 8 in the chat. All right, awesome. Thank you, guys. So pretty much that's how the time frames come into play when you're looking at the candle. So again, a green candle or a buy candle, it will tell you the open, the close, the high, and the low. Now, this is really important because understanding the bodies and the wicks will help us understand how the market is moving. Again, even if we don't have any indicators on our chart. And the reason why I took the indicators off is so that we can look at this and we should still be able to reach the same conclusions even without those things. So in more recent classes, we've moved a little bit past talking about support and resistance, but I will review that today. And then also, again, just give you guys a refresher on supply and demand as well, right? But I'm going to actually be doing this a different way, right? Because we can look at these candles and we can clearly see, right? Even without the indicators, whenever we have wick activity at the bottom, let me just make this black so it's not confusing. We can see that whenever we have wick activity at the bottom, this is usually the beginning of a buying trend, right? We have wick activity at the bottom, and again, this is a buying trend. Versus when you have, let me move this, wick activity at the top, it'll be a selling trend. You're having wick activity at the top, it is a selling trend, right? So if you can see that, right, even without any indicators or additional confirmations, you can see that once you start to see a collection of wicks in a certain area, right, whether at the top or the bottom, the market tends to be making some sort of move, right? If you can see that, drop a 7 in the chat, and I'll just scroll back, right, so that you guys can see the different examples of this. And again, this is even without any indicators. So if you've been struggling with indicators or struggling with the confirmation checklist, I do challenge and encourage you to really go back to the basics, because sometimes that's really what we need to do, right? Because let's just say we came into the market at this time, and I'm just going to go ahead and put my chart in replay mode, right? If we came into the market at this time, right, with no indicators on our chart, the first thing we can see is that, okay, I noticed that the market has tapped into this area, right? Two major times, but we're going to include these small wicks as well. I can see that the market tapped into this area 2 times. So again, without any indicators, our conclusion should be next time the market taps into this area, it's probably going to buy. Or even if it doesn't tap into this area again, we should make a mental note that this is the start of a buying trend. So I'm going to go ahead and play this out, and I'm just going to do I'm going to use my long position tool, and this is just to demonstrate the example. But the long position tool basically says that this is accounting for our buy analysis. It's helping us set our TP and our stop loss. So when you see something like this at the bottom, for example, what you would want to do is set your stop loss a little bit below the wicks, and this is for a buy, so we're using a long position tool. When the market is buying or going up, or you're getting in for a buy, it's called going long. When the market is selling, or you decide to get in for a sell, it's called going short. And I like the fact that you can literally just drag this, because you don't have to. Okay, says I'm breaking up again, so I will wait. When I am clear, please drop an 8 or let me know that I'm no longer breaking up. So I got some 4s in the chat. All right, so I got an 8 in the chat. I'm clear again. Thank you for letting me know. And again, whenever I break up, guys, thank you, Kayla. Just drop a 4 in the chat and from breaking up, and then drop an 8 when I'm clear again, so that I know to slow down or repeat myself. All right, thank you, Spicy. All right, so I like the fact that you can drag this tool. And at this point, we're not really worried about numbers or anything like that. We're just looking at it for the example purpose. But this is what you can do when you're setting your TP and stop loss. We're going to drag our danger zone, right? Our stop loss zone a little bit below the wicks. If you put it right on it, that's a little too close to comfort. So just give it a few pips. And then because we're going for a buy, we're going to take our green section above the previous high, which is here. And we're just going to play this out, and we're going to see what happens. And we see exactly what happened. The market tapped down like we thought it would, right? And in this case, it probably would hit stop loss. So again, that's why you want to give yourself some breathing room. The market came down into the demand zone, and then it went up for a buy simply because we noticed what the wicks were doing, right? This, again, no indicators, no confirmation checklist. We're simply acting on price action and understanding what the candles are doing. So we're going to go ahead and end this replay. And I'm going to show you guys a sell example of how you can basically use price action to understand what the market is going to do. And we're going to back it up here. Now, when you notice that the wicks are at the top, right, we see several wicks, right? Now, it looks like the market is on an uptrend, but this is the way that we can kind of gear up and really prepare for that reversal. When you see the wicks at the top, this is called your supply zone. Now, sometimes you'll notice it only takes one wick is the first indication that it's a reversal. Once you get the second wick, the market turns around. But for me, a 3 or more, that lets me know. So we can just actually highlight this section because we can see that the candles literally tapped into this zone, right? It tapped into the supply zone multiple times, meaning that a reversal is imminent. So even without our indicators, we're going to see what would happen if we really used demand and we understood the price action of what was going on. So this time, because I'm going for a sell, I'm going to use my short position tool. And again, I do have a 5-minute video on this, and it's called the easiest way to calculate TP and stop loss in 5 minutes or something like that. And I also just dropped another video on TradingView called where to put your stop loss in TP. So it's very simple. So this time we're going to do the same thing. We're going to take our red section, and you can put it, if you put it directly on it, you see how it would tap into it and take you out the trade. We don't want that. So we need to have our stop loss, right, for a sell a little bit above, right, where the wicks are. Because I can put it right on it. I'll do too. I'll put it right on it. And then I'll do one that's a little bit higher so we can see which option is better. So y'all can know I'm not just mixed stuff up, right? And then your target for a sell, you want it to be below the previous low. So that's pretty close. So we're just going to drag it a little bit down, right? Because if it's selling, the market should be creating new lows. It shouldn't be creating new highs. And we're going to do the same thing for this one. I'm going to just drag it down to a previous low. So now we're going to see what happens. And what I want you guys to notice is the market should tap back into this purple area, right? And then it should actually come down and be outside of the green boxes. And we're just going to see what happens, right? The very next candle tapped into that zone, and TP was actually hit on both of these trades. Tapped into the zone again, right? I can just drag this purple box over, but it tapped into the zone again. And then it continued to sell again, right? So I'm really showing you guys this because I want to make trading as simple as possible, right? This is not an elementary skill, but the concepts are really elementary in nature, right? We're literally just dealing with rectangles, right, for the candles. We're dealing with lines, right? If you guys know what shapes and lines are, drop a 7 in the chat, right? It's pretty simple. We just have to really understand how all of these things are working together. And I feel like sometimes the indicators can be a little bit confusing, even though they do add some fuel to the fire. So I'm going to actually put my indicators back on my chart and show you why this can be confusing and how they're not necessary, but they do help. So let's just let this finish playing out. Actually, I'll just end it. So I'm going to add my indicators back to the chart. All right. And we're going to see how this could be confusing. Because for my strategy, because I trade with the trend most of the time, I don't really focus on reversal. So this is more of a reversal approach. However, it doesn't really matter because if you know what you're looking for, you can still become profitable, whether you choose to trade with the trend or whether you choose to trade reversals. So for my strategy, you will ask yourself the confirmation questions because typically when the candles are above the EMAs, the market is buying. But in this case, we can see how we still would have been able to secure some pips. Even though the market was still buying, right? It still actually came down and bought. It still actually would have hit TP. And then you see I basically just chose my TP by putting it at a previous low. So with the indicators, if you would have, and let's just back it up. Now, if the indicators, if you would ask yourself, are the candles above or below the EMAs, right? You would have got above. Is the momentum line facing up? Is facing up and it's positive, right? We can also see that the stochastic is facing up and both numbers are above 50. Now, with that being said, we would have entered this trade for a buy if we were not focusing on price action and we were only using the indicators, right? Based on this setup and what we've learned about class so far, if you were looking at this, would you have taken this trade for a buy? Right? Drop a 7 in the chat if all the confirmations and indicators align for a buy. And I'm going to drop a 7 in the chat, right? I'm going to drop a 7 in the chat because everything says buy. Now, if I were to put my long position tool on the chart, right, and I would have put my stop loss below the lowest low, and then I would have put my TP up here, and I played this out, stop loss would have been hit, right? The stop loss would have been hit on this trade, right? Especially if you were just strictly going off of the confirmation checklist, you weren't checking price action, you weren't checking what the candles were doing, and you would have been extremely disappointed. And this is a situation that I have found myself in a lot of times before, because you can think you're doing everything right, but when you forget the basics, right, like understanding price action, that is when you start taking a lot of losses in your trades, when they are completely unnecessary, right? They're completely unnecessary. And I don't want the indicators to confuse you, right? I still want you to use the indicators because if you are trading with the trend, it's lovely. But when you start to see signs of reversals, and that's what I want you guys to understand, trading with the trend is nice, but if you notice a reversal and you're not prepared for that, or you don't know how far it's going to reverse, you can just simply look at another pair. So we're going to go to a place in the market where everything does make sense. So I can show you, don't be scared to use your indicators, but don't rely on them because you can be wrong. So we're going to go here and we're going to do an example of where everything actually is aligning, right? So the reason why this is going to make sense is because we actually have this, right? You have to pay attention to your demand zone, right? Demand is at the bottom. It means the wicks or candles have tapped into that area. And we can see that. If you guys can see these two wicks tapping into this demand zone, and demand is essentially the same as support. It's where the market will go into that place and then it will buy. If you guys can see this demand, right? Drop a 7 in the chat. We see that the wicks have tapped into that area twice. Drop a 7. Right? So we see that. So that's a good thing. So the first thing you want to do, if you're new to trading, you can either go strictly off of price action or still set up your supply and demand first before you check your indicators, right? First. So we see that. That's step number 1. So that's confirmation 1 for a buy. You can ask yourself that question. That could be another question you ask yourself in addition to the trading checklist that we already have. Have the candles tapped into a supply or demand zone? Yes, we can see it tapped into a demand zone. Perfect. Are the candles above the blue EMA? Yes, it is. Confirmation number 2. Are the candles above the purple EMA? Yes. Confirmation number 3. Is my momentum indicator facing up? Yes, it is. Confirmation number 4. Is it positive? Yes. Confirmation number 5. What about my stochastic? Is it facing up? Yes. So we have all the confirmations for a buy in addition to the candle tapping into the demand zone. And we're going to see how it works out for us this time. Again, this time we're going for a buy. We're going to set our TP above the previous high, which is here. And we're going to set our stop loss below the previous low. So it'll be something like that. This time we're going to play it out and see what happens. And our TP was hit, right? The market, it didn't even turn around. right? It didn't even turn around simply because everything was in alignment. Now, do you guys see how if we only use the indicators, our trade would have hit stop loss? But when we use the indicators plus understanding price action, we get a much better outcome. If that makes sense to you guys, drop a 7 in the chat, right? And we're going to do some more examples of this so that you guys can get comfortable with doing this on your own, because that's really the purpose. In the last month, September was a really interesting month. A lot of the currency pairs have been on some other stuff, to say the least, and the trades have been developing very slowly, the ones that I've been placing in the chat. So I don't want you guys to wait for those trades to develop or get impatient, because the market is open 24 hours a day, right? 5 days a week, 7 days a week if you're trading crypto, and it's not that hard. So if you think this is simple, right, and that you can do this on your own, drop a 7 in the chat. And again, we are going to do some more examples. And if you guys have any questions about this or what we're talking about today or anything so far, please drop those questions in the chat and I will answer them to the best of my ability. And welcome to everybody who is joining the class a little bit later. Today, we're just talking about price action and trading with no indicators. I like to call it no indicators, no problem. I do have several other no indicator videos, price action videos on YouTube that you guys can check out if that's something that you are interested in, right? So let's look at another pair, because this is not exclusive to Euro GBP. You can do this with anything, right? I know some people like to trade gold, some people like to trade Bitcoin, some people like to trade US 30. That's something that I'm practicing with those things. But we can just look at it, right, to see if the same concept would apply when it comes to supply, demand, and all those beautiful things, right? So I can already see it right here, and I'm gonna just back up the chart to right here, and we're gonna see what do we see going on here. So we do see some wicks forming at the top. So remember, you want to highlight your supply and demand areas first. How do you draw the rectangle? Great question. So on this left panel over here, all these tools are free, right? The only thing that TradingView limits you on the free version is indicators, but these tools are free. So you come down to this box. I think it starts with a brush. So you would just click on it and you will select rectangle. And then you just go from there. And you can also change the color. You can actually, I'll probably do another video on that, but you can change the color and you can save these things so that you can automatically add them to your chart. So let's just say we were looking at gold and we noticed that we had a supply zone here. The first thing we would do is highlight it. If it makes you feel better to notice the supply, you can change it red so you know that that's where you sell, right? So all we really would do if we were not trading with indicators is we would wait for the market to tap into this area, or we would set a pending order. And again, if you guys want more information on pending orders, I have several videos, or you can do a quick Google search and you will find everything you need to know. But I did just post a TradingView video on pending orders. It's pretty straightforward. I think it's like 7 minutes. So we have our zone. Now, if we're strictly using that, all we do is want to play it out. We see the very next candle tap into that zone, right? Directly on the line, right? This is just, it's not even, it's just guesstimation, right? You're just saying, I know it's going to tap into that zone. You could put a line here, here in the middle, wherever, or you can just get in. Candle tapped into the supply zone and it actually sold. No indicators, no problem. Now let's see if this is a case where our indicators actually align. And it does, right? It actually does. So we have our supply zone. We noticed that was there. And I'm going to just back it up again. Right? I'm going to back it up. We see the candles have tapped into there, right? So that's confirmation number one. If you add that to your confirmation checklist, have my candles tapped in to my supply or demand zone? Yes. If it hasn't, you could set a pending order. So we got confirmation number 1 for a sell. Question number 2, is the candle below the blue EMA? Yes, it is. Is the candle below the purple EMA? Yes, it is. Is my momentum facing down? Yes. Is it negative? Yes. Is my stochastic facing down? Yes. Are the numbers below 50? Yes. This is a non-negotiable sell. If the market were to turn around, the only thing I could say would be the reason for that would be the news, because everything here says sell. You would get your tool over here, short position tool, right? Put it there. Again, you take your red. If you're going for a sell, you place it above the previous high, right? Because if it's selling, the market should not be creating new highs. It should only be creating new lows. And for your TP, you want to drag it down so that it at least goes below the previous low, right? Because it's a sell, it's creating new lows. Now, once we click play, we can see that in this case, our TP would have been hit as well. And then the market actually still continued to sell, right? So I really want you guys to understand that this doesn't have to be hard. You can transfer this to other assets as well. I know that different people like to trade different things, but that doesn't mean that the concepts, right, and the technicals that you're using have to be different. You don't have to use different indicators to trade different things. And we can even go as far. I'm not a stock trader. I don't really trade stocks yet, but we can even see if this will work with stock trading as well, right? We can see if this will work with stock trading as well. So for stocks, you do want to look at it on a higher time frame, right, by the day. If you want to do it by the hour, that just seems a little sketchy, but hey, it just seems sketchy to me. So we're just going to look and see if we can find any examples of supply and demand happening with stocks. And if we see that it works, hey, go for it, right? If it doesn't work, don't go for it, right? This look crazy to me. I don't know why these candles acting like this. So far, I can see a small example here, right? It went up. I can see an example here. It tapped into supply. It went up. But I feel like it's a little bit more with stocks. So you guys, if stocks is something that you're into trading, I recommend that you back test it on your assets that you trade. But just by looking at this, here's a good example, right? And this is a really good reversal example because we got the crossover on the stochastic. We see it tapping into the supply zone. The demand zone. We see it using the EMA as the area of support. I see another example here, right? So I just would encourage you guys to test it out. Here's another example, right, of the candles tapping into the demand zone and then actually buying, right? We see the momentum actually being up and over, well, positive. Well, I'll have to go back to that exact place. Yeah, guys. So I'm not sure if this will work with stocks. Again, like I said, you will have to back test it, but I am a Forex trader and that is what I focus on. So we see that it works with Forex. We see that it works with commodities like gold. We can see if it works on Bitcoin, which it might. We just got to look at it and see. So first, we're going to do straight price action. And again, before we actually add our indicators back to the chart, we can even see examples of the market tapping into this demand zone, buying, the market tapping into the supply zone, and selling. Now, Spicy says you're somebody who likes to trade Bitcoin, and Joe, you're somebody who likes to trade gold. Does supply and demand work well with those assets based on your experience? I'm looking at it so I can see that it does, but based on your actual trading, does that work for these assets?
Well, For Bitcoin, it does. And if you scroll back in the chat, I have a lot of different entry points that I've put in there. And it's based off of me trading Bitcoin for the last almost year and a half and having real time experience of course, trading, of course, marking my support and resistance levels and just going from there. But yeah, based off of, like I said, that's the experiential knowledge. It does work. Bitcoin is very tried and true. And yeah.
Okay, thank you, Spicy. So take it from Spicy. She is our Bitcoin contributor in the chat. That's her thing. If you guys scroll back in the chat, there's actually the newsletter for September. It has all the Bitcoin entry points in there. But if you do want to practice Bitcoin on your own, again, just literally pay attention to supply and demand and use your indicators. Here we have an example here. If we were to come into the market at this time, the first thing we're going to do, no matter what you're trading, find out if the market is near a supply zone or a demand zone. We can see it's already tapped into this area 2 times, right? 2 times is good. 3 times is even better. We're going to get our long position tool. We're going to say our entry is somewhere there. We're going to set our buy TP above the previous high. We're going to set our stop loss below the previous low. Then we're going to play it out. And we can see the market never actually came back down, but these 2 taps into the zone were pretty much good enough. We can see it was 2 more taps here, then it was a push up. 2 more taps here, then it was a push up. 3 taps here, then it was a push down. So again, indicators are cool, but don't let them confuse you. If you understand price action, if you understand supply and demand, if you understand what the market is doing, I think you'll have just a better chance at being a successful trader overall. And here's just the trigger words that I use. So when I ask myself the questions that I was asking earlier, are the candles above or below the indicators, right? If you get these answers to the questions, that means you're going to go for a buy. If you get these answers to the questions, that means you're going to go for a sell, right? You can add additional words to this as well. Is the candle, I'm going to just put it here, right? Demand. Is it in the demand zone? That's going to be a buy confirmation. Is it in the supply zone? That's going to be a sell confirmation. So we're going to actually look at the market right now together to see if we can get our first trade idea for the week. However, I do want you guys to be careful simply because it is NFP week. NFP week is usually the first week of every month. And the markets are extremely volatile. So you do want to make sure that you are checking the news. The website that I use to check the news is forexfactory.com. And of course, I do have a video about how to maximize Forex Factory as a trader, right? So I don't really see anything too crazy happening Sunday, right? We're just going by the colors of the folder. Gray means it's a holiday. Yellow is nothing crazy. It really starts getting crazy when you're looking at the orange and the red pairs. And I'm actually going to make another video about Forex Factory, about the reports that you should pay attention to, because some of them happen more often than others, and some of them will have a bigger effect on the market. So when you're checking the news, especially for NFP week, you definitely want to make sure you don't see any red folders, right? Because that's it could have the potential to really throw off your trading. We see on Tuesday, we got some red folders on USD. And just to do a brief overview, you don't have to read all this stuff, but just to show you guys how Forex Factory can be helpful, we can just click on the folder to see what the news is. And it literally tells you actual greater than forecast is good for currency. And all they're saying is this is the actual, this is the forecast. So if the actual is greater than the forecast, that's going to be a bullish or buying confirmation. And again, I don't want you to get confused. I'm just showing you how to maximize using Forex Factory, but you can watch the video. And again, it tells you this report is released monthly on the first business day after the month ends. And it tells you, I love this part here. Why do I care, right? Why do you care? It's a leading indicator of economic health. Businesses react quickly to market conditions, and their purchasing managers hold perhaps the most current and relevant insight into the company's view of the economy, right? So if the forecast is low, for example, they like, oh, I think the economy is going down. But then it says that the economy is actually going up. Of course, people are going to be buying because they like, oh, it's not as bad as I thought. Let me get in for this buy. I'm not losing money on this, right? If that makes sense, drop a 7 in the chat, right? I don't want you to get confused with Forex Factory. I want you to know how to use it. So you can, any of the red or orange folders, I usually do click in and I see, do I care? Right? Is this relevant to me? Yes, Killa. You should watch my Forex Factory explain video. I think it's like 15 minutes. And the cool thing about this too is I know I'm getting to Forex Factory and I said I wasn't gonna do that, but it's if you click on calendar, this is just Forex. But if you guys like to trade other stuff like gold, is gold a metal? I don't know. But if you click on the side, like if you click on the calendar at the top and then you click on the side and you click metals calendar, boom, you get a whole nother news. So this might be helpful to you, Joe. Gold is a metal. I don't want to sound dumb, but I think it is. Spicy, this will be helpful to you. They have a crypto calendar as well. So you can use this when you're not trading CAD/JPY. Again, you click calendars at the top. And if you click the crypto calendar over here, it'll change and it'll have nothing but crypto news. So Forex Factory is like, it's just so much information on here. And I'm such a Forex like trading nerd. Like I be trying to figure out everything about everything. So for my crypto traders like Spicy, they do have a full basically news for that as well. So you can see what's going on with BTC. You can see what's going on with those other assets and cryptos that you like to trade. And you'll always know which chart you're on based on the color. So CryptoCraft is purple. The metals calendar is red. And the Forex Factory is blue. This is Forex Factory. Okay, this is Metal Mines, Crypto Corner, and Forex Factory. Oh, I see what they did there. That's cute, right, y'all? That's cute. So yeah, we just gonna go back to Forex Factory. It's the same thing, Gerald, but if you want to switch the calendar based on the asset, you click calendar at the top, and then you click on the left side over here, which one you want to look at. So metals, energy, or crypto. So yeah, guys, I began distracted so fast, but all right, we didn't see any alarming news for Euro USD. But what we can do is find our let's find our most recent zone, which is here, right? Because we see a tap here, we see a tap here, we see a tap here, we see a tap here. Cool. I'm gonna change this red so we don't get confused. So this is a potential trade idea that we can be looking at for the week, or not, but I'm just showing you guys what I would do. And what I do when I am dropping trades in the chat. So we have our supply zone there. I would probably set a pending order up here if I was going for a sell. I would turn my indicators back on. All right, cool. I see that my candles have just crossed below my blue EMA, which is perfect. It looks like a downtrend is starting based on this. I see my momentum line is already facing down and negative. I see my stochastic is pathetic and pitiful. So this to me could be a potential sell idea. So I would take my short position tool. If I do set a pending order, my entry point would be somewhere up here. So when the candle taps back into that zone, if it does. And this is why I usually say, if you guys scroll back in the chat and look at the trade ideas, it says market execution or whatever, sell limit, buy limit, is because you can get in now. Or if it does tap back into that area, that is what the sell limit in this case would be. So our stop loss, of course, would be above the highest high. Well, the previous high, or you can even take it back above the purple EMA, right? Just to be safe. And then our TP will be somewhere down here. And then once you click on this, this will give you the numbers that you need to plug into MT4. So your entry point would be wherever the gray line is, 105.74, which is about 16 pips higher than where the market is. That's very likely to revisit that zone. We can see the profit level in this example is 90 pips, and our stop loss is 45 pips. So this is a 1-to-2 risk to reward ratio. Oh yeah, she definitely was looking at a sell last week. So if you did enter that trade and held it, you could potentially be in profit this week, but just watch it. So in this example, y'all, this is a 1-to-2 risk to reward ratio. Y'all know I just love my 40 pip stop loss at 80 pip TP, but do whatever you want, right? And base it on what you're seeing on the chart. I'm just I have to do stuff the same way, like OCD person, but you don't have to do that. Like go by what you actually see. So 45 pip stop loss, 90 pip TP, right? And we won't know how it plays out until it actually plays out, because this is the market in real time. So you guys can potentially look at Euro USD for a sell. And I'll drop this in the chat as well. Let me just save it. And then we can look at something else just so y'all can see how you can, for people who say they don't have time for trading, or I'm so busy, or I work, or whatever is taking up your time, it doesn't take 50 years to do this, right? It doesn't take 50 years to do this. You can look at multiple pairs in a short amount of time. Already right here, I see a demand zone. I'm gonna turn it green. If you could take an extra 30 minutes out of your day, even 10 minutes, it'll be fine, right? We're gonna get our long position tool for the buy. Like it's already starting to buy. We could put our entry point somewhere down here in the demand zone, our stop loss below the lowest low, right? Our TP somewhere up here. Look at the numbers, see if it makes sense. In this case, we only got a 10 pip or 11 pip stop loss. It's not impossible, y'all, because once the markets start going, you don't even need a 40 pip TP. You could have a 15 pip stop loss and the market can really go your way. So this right here is a, hold up. This is a 1-to-5 risk to reward ratio, because we have a 15 pip stop loss, a 75 pip TP. That's a 1-to-5 risk to reward ratio, because you're risking 15 pips to make 75, which is 5 times 15, right? I think. So there we go. That's another potential trade idea, right? We can look at another one. Now, I'm not going to drop all these trades in the chat, but I'm just showing you how quickly you can get through this, understanding what you're looking for. But I think that's all I have for you guys today. If anybody, it says I'm breaking up. That's really all I have for you guys for today. If you guys do have any questions, feel free to ask them now. You do have the ability to unmute yourself if you want to ask a question, or you can drop it in the chat. And I will give everybody just 30 seconds to drop those questions if you had any. And I'm just showing you how quickly you can do this. And I just think everybody should be making a withdrawal this month. All right, we got another one right there. So simple. All right, just waiting for any questions. I just marked up like 5 pairs in less than 10 minutes. All right, so doesn't look like anyone has any questions. But if you guys found this session helpful and you learned something, just drop a 7 in the chat. All right, awesome. Thank you. Thank you. Thank you. Just a reminder that the challenge from last week is still going on. It pretty much was the Find Your Win Rate challenge. We did watch a video last week with the amazing Mark Douglas, who is basically the father of trading psychology, and how you actually feel when you get into the market. So he said that it usually takes about 20 to 25 trades to figure out what scanner this is. It's just TradingView. It's just tradingview.com. I just added my own indicators to my chart. The indicators that I use, I do have it in multiple videos, but I'll send you the 5-minute version, which says like improve your strategy in 5 minutes or something like that. That's a pretty popular video. Or you can watch the TradingView video I have, which the one that went viral, the best Forex strategy I've used in 3 years, which has like 1,000 likes and hundreds of comments. To set up your chart like this, or you can just practice with price action, but it's pretty simple. It's pretty simple. And just a little hack, if you guys are using the free version of TradingView and you can't add 2 EMAs to your chart, you can only add 1. The indicator that I recommend would be the it's called MA cross, right? Because it literally comes with 2 EMAs already. And the cool thing about it is it has this little cross here when the EMAs actually do cross. And whenever they cross, that's literally when you want to enter the trade. So in this case, when the orange line is on top, you go for a buy. When the green line is on top, you go for a sell. So that's just a little shortcut for the MA cross if you can only use 3 indicators for the free version of TradingView. Oh yeah, so let's just go back to Euro USD real quick and see if it. Oh yeah, there you go. You got your cross for your sell right here. You got your cross right here for your sell, so it does look like it actually will sell based on that indicator. But that's all, guys. Make sure you continue to trade. If you haven't did your 20 to 25 trades from last week, you still have this week. The challenge ends on October 6th. And the prize for that challenge is you get to choose one of the previous prizes, which is $25 in your trading account, $25 for no reason, 80 points, or unlimited one-on-ones until the end of the year. The challenge for this week is to post at least 2 ideas on TradingView. That's the challenge. If you don't have a TradingView account, you can create one. If you want to participate in this challenge, I will drop all the criteria in the chat so that you guys can participate. If you want. The win rate doesn't start over for this week, but by Friday, I want you to calculate last week and this week, or just take the average of 20 trades. Whichever is the easiest way for you to decide your win rate. But I do want you to combine last week and this week to find out what your average is. But that's all that I have for you guys today. Until next time, rich friends. Good night.